The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN Friday morning, 8:30 a.m., 60 minutes to go until that opening bell. And we got markets in negative territory, but we're pretty dramatically off of the lows we had last night. Right now, you're looking at an S&P negative 32 points at 3270. You say, that's a little dicey right now, negative 32. But you see the action we had last night, right? In terms of the S&P right now, where we're going to be in terms of that close at around 4 o'clock, 3303, and there's your negative 33 points in that action. A lot of that action, though, taking place right after the closing bell, as you had Apple trading lower, Google, the one trading higher, Amazon trading lower as well. Strong numbers for Amazon, but nonetheless, the market pulling back a bit on some of those tech stocks, Facebook, Twitter pulling back as well. We'll jump into all of them for this half hour. You see the acceleration we got overnight. 2:30 in the morning, we're down there at 32.26. So you're approaching about 45 points off of the lows. So we're down 37 points right now, but you were down about 80 S&P points at the lows. Things looking very dicey. Market, you could say saving itself a bit, but with that in mind, we just traded 20 points lower over just the last hour and a half from a price point of 7 a.m. You're talking about down to about 32.71. Should be a wild Friday in the markets, folks. Doesn't get more wild than this in terms of quite a week of earnings. We had the big four last night. We had GDP yesterday, strong numbers, weekly jobless claims yesterday. It is the Friday before a presidential election. Pretty remarkable. Jumping around to commodities right now, crude. Quite a week for crude to the downside. Right now, 36.13, down about 2 pennies. Natural gas, flat at $3.30. We got silver right now trading up 29 cents at 23.65. Gold catching a bid off some of the lows we made yesterday, 18.59. Currently trading at 18.82. Notes and bonds, a little bit of higher price, but we're talking about a yield right now of 0.823%. The 10-year up 2 ticks at 138.15. You got the 30-year up 13 ticks at 178.03. And the volatility index, 3790. We were above 40 yet again, correlating to when you had the markets at the lows. We're currently trading 37.90 as we flirt with the volatility around a presidential election. And what else we got? Personal income. U.S. personal income rising 0.9% in September. Market was looking for 0.4%, so a little bit of a beat there. The numbers this week, they've been pretty strong, but pretty strong is what's priced into this market, and maybe not strong enough in terms of where the market has allowed some of these equities with their numbers. You miss in any way, and you're getting punished to the downside in a big way. All right, jumping around to what we have going on. We'll start it off with the biggest of them all, Apple. Apple trading lower this morning. You had strong iPad and Mac sales. A little bit of a miss on the iPhone. No guidance for the next quarter. When you think about it, right, if you can get away with it, why not? And they don't quite get away with it. You're trading down $5. When you think about no guidance at all, for one of the biggest quarters you might have, it's going to be a holiday quarter. It's going to be a holiday quarter that incorporates the iPhone 12. And Apple says, you know what? They're not going to like it, but we're going to give them no guidance for the quarter because we got a little volatility. It's a quarter like maybe no other coming into holiday season during a pandemic at a time when Apple's trying to have a super cycle of a launch of their iPhone 12. The numbers pretty strong. Revenue. They beat by $1 billion, 64.7 versus 63.7. iPhone revenue's a miss, 26.44 versus 27.93. Here's the thing, though. They just launched the iPhone 12, right? Does that even play into those iPhone sales? I'm not even sure. It's all about the future in that iPhone 12. If you're talking about iPhone revenue, of how that iPhone does for probably the next 6 months or a year as they launch it, really. Next 3 months, the most critical. Services they beat. 14.55 versus 14.08. Other products they beat. It's amazing. Their other products revenue approaching $8 billion on a quarterly basis. Mac revenues are beat. iPads revenues are beat, right? Gross margins, barely they beat there. But Apple trades lower right out of the gate. We're currently trading at about 111. For some context on Apple, 111, you're talking about you're basically back to August 4th prices. So you're going to basically have a 3-month consolidation going on Apple since they popped higher, interestingly enough, right after their last earnings report. You got all the way up from 110 to a very frothy 137.98, and you're going to open Apple at about 111. All right, jumping down to the next one, Amazon. How about a $4 billion COVID-related cost next quarter, potentially? But guess what? Even with that in mind, profit for the next quarter, talk about giving themselves a range. Amazon says they're going to make between $1 billion and $4.5 billion in the next 90 days. They give themselves that range because they're not sure what's going to happen in terms of the numbers they're getting into, in terms of what they had. So let's see. Amazon said sales in the fourth quarter. How about this one? Sales in the fourth quarter, this coming holiday quarter, $112 billion to $121 billion, compared to the average analyst estimate, 112.3. That's quite a beat, right? They're basically saying, yeah, we're going to take in at least 112. We might take in up to 121 billion. Analysts were expecting operating profit of 5.8 billion. Okay, so that's where they're taking a hit a little bit. COVID-related costs will rise from 2.5 billion in the third quarter to 4 billion in the fourth quarter, bringing on 100,000 people in October alone. Think about that. Now, some of those might be seasonal workers. Nonetheless, Amazon shares jumping over AMZN. That's your long-term chart. You're going to see we're down about $50 this morning. We're going to open at about 31.61. So for some context here, pretty muted reaction, right? You're basically right in the middle of this consolidation we've been having since the beginning of July on Amazon, as it's bouncing around with a low end of about 3,000, the upper end maybe 3,400 to 3,500. We're currently going to open at 31.63 for a short term. There's your action on Amazon. We got a brief spike, probably the beat in terms of next quarter revenue, looking for a big beat on revenue this quarter. But when you got into it, I guess the market saying, we were priced in for a lot of growth already, and we're going to pair a little bit of those gains on Amazon. All right, what else we got? Facebook. Decline in users in the U.S. and Canada. We use Facebook for having just a social presence at TFNN. It's actually easier for me to have a personal Facebook if you in any way are interacting with Facebook on a professional level. That's why I have a Facebook account. I often say if I wasn't involved in any way with my Facebook user account, it just allows me to have a simple account, at least where I can log in and access whether it's the TFNN Facebook page. I do enjoy Instagram. They are a Facebook property, but I enjoy it because it's not as much posting words. It's pictures, but there's a lot going on there as well as everything sneaks in. But I would consider deleting Facebook. If that was not the case myself, I would. Facebook's user base fell to 196 million daily active users in the U.S. and Canada from 198 million a quarter earlier. Facebook on the shrinking. What's up with that? Zuckerberg can't be happy. Facebook down about $3. Still pretty strong numbers. We'll get into them right after the break. Stay tuned, folks. We got a lot to cover this Friday morning. We'll be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Hi folks, this is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The Gold Report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The Gold Report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got the S&Ps down 28 points on the session. You put this on a 60-minute chart going back to October 11th, the high of 35.41. It's been a one-way slide to negative territory. You put it back to a 15-minute, just going back for the week. You ended last week, Friday action, above 34.50, give or take, and it's been, again, one way down from 34.50. We trade down 225 S&P points just this week alone. I mean, so much volatility coming into the presidential election. Getting a little bit of a spike from last night, but we'll see where we end up. And really, we're just basically back to the lows that we had on Wednesday, approaching that level 32.74 in the S&Ps. Jumping back to Facebook real quick. So Facebook down about $2 on the session. So we talked about shrinking numbers in the U.S. and Canada, but you get into the numbers pretty, and this is what I talk about, strong numbers here to trade lower. Earnings, how about 271 versus a $1.91? Revenue, how about beating by more than $1.5 billion? And percentage-wise, that's a big beat. They were supposed to take in 19.8. They took in 21.47. Daily active users, actually an increase, but you get into the U.S. and Canada, as we mentioned, a decrease. Monthly active users, a beat as well, 2.74 versus 2.7. Average revenue per user, a beat as well. As we mentioned, U.S. and Canada falling to 196. So it's interesting. The U.S. and Canada making up about just more than 10% of their entire daily active users. 196 versus the 198. Its user base in Europe remained flat at 305. So you combine this, so you're about 500 million when you combine the U.S., Canada, and Europe of their 1.82 billion that they're dealing with. Monthly active users, quite the acceleration, but Facebook trading lower. Not trading lower this morning is Alphabet, trading higher in a big way. Company crushes expectations is how they put it. How about earnings of $16.40 versus $11.29? How about revenue beating by $3.27 billion? Whew, 46.17 versus 42.9. The cloud was a beat. YouTube ads were a beat. Traffic acquisition costs, more than the market was looking for. Annual ad revenue growth, we're back in positive. Total ad revenue, I mean, you had some anomalies here for sure, but that's quite a number they got up there. For the quarter ending, the company brought in total ad revenue of $37.1 billion compared to $33.8 a year ago. YouTube ad growth particularly strong, up 32% from a year ago. Folks, think about a year ago. Think about what you think of the company YouTube a year ago, and then factor in that in the period of 365 days, YouTube ad growth goes up 32%. Quite a number. Fears of a search advertising crunch did not materialize. The company's search and other advertising category, 6% growth. So growth all over the place. Google shares really spiking higher last night, even this morning, as the market is spiking a bit as well, trading a bit higher. 17.18, was the spike initially. You're talking about $150 in the price that we traded higher. Right now, you're up just more than $100 in the price of Google at $16.84. Some context on Google, where we've been, $16.84, you're coming right up to the highs here. $16.21, you're going to be above there. We're only dealing with $17.33, going to be the all-time high above that price level. Checking in on some of the other stocks. Now, Microsoft had their numbers out on Tuesday after the bell. We trade lower on Wednesday. A little bit of volatility yesterday. Microsoft was down at almost 200 overnight at the market lows. This morning, we're a bit lower on Microsoft at 202.98. What else we got? Twitter, not really doing well this morning either. We'll jump to their chart first. TWTR. That is a drop off from $52.43 down to $42.78. Almost a 20% drop, give or take. You're currently trading at 44.73. Some context on Twitter. It's been quite a rocket ship, so we're trading this morning back to about 45. Realistically, you're only back to where we were trading 10 days ago on Twitter. Pre-COVID, we're under 40. The lows of 20. We've had a strong run since then. Getting into the numbers on Twitter. Earnings, 19 cents versus 6. Revenue was a decent beat. How about this one, though? Monetizable daily active users, 187 million. They were looking for 195. They grew its total monthly daily active users by just 1 million from last quarter to 187 million. You know, you only got 187 million. We just saw Facebook. What do they got? 1.8 billion. And you can't grow by more than a million. Seems like they might be stuck there. And not only are they stuck there, how do you monetize those users on top of that? Ad revenue grew 15% to 808 million. But you see the numbers Facebook deals with. Twitter, not even close in terms of what they're dealing with. So the number of users, more important than anything else, right? Are they growing? Are more people on the platform that they'll be able to monetize in the future? The answer, no, not really. In a world where we are captivated by Twitter, the President of the United States lives on Twitter. He was out there last night at 2 in the morning firing off a tweet storm. If Twitter can't grow their user base when everybody's at home, everybody's on their electronic platform, Facebook doing so well in terms of their numbers. But Facebook daily active users actually decreasing, Twitter only increasing by 1 million. They're getting hit today in a big way. All right, what else we got going? Under Armour out with their numbers. Strong numbers, especially when you talk about footwear. How about a 19% jump in Under Armour's retail footwear revenue for the third quarter? Under Armour. And there's your pop. From $12 to $13, we're up a full $1. So you're talking about almost 8%. Some context on Under Armour. We're going to open at about $13. The high we just had was up there at about $13. The recent high, $12.82. So we're going to open just above 13, still dealing with some pain for this company. You back it up to pre-COVID, we're at $18 and change. Their earnings already before the COVID collapse, dealing with some woes for Under Armour. All right, jumping around to the indices. We got 40 minutes to go until the opening bell. Now, pretty interesting, of course, the lows from September, 3,200. As I mentioned, we got down last night, 32.26, right near that level. Quite a pop we've gotten now. We're up about 55 points to 32.80 in the S&Ps. Commodity-wise, gold catching a little bit of a bid, now up almost $19 at 18.86. Silver up 40 cents at 23.76. And jumping around to some of the other companies, Chevron out with their numbers. I mean, it just doesn't stop. 186 companies in the S&P this week alone coming out with their numbers. Revenue plummets more than 30% as COVID slams demand. They lost $207 million in the quarter, earned 11 cents a share, though, far above the 27-cent share loss that the market was looking for. CVX is their symbol, up a bit this morning with a negative market. Exxon out with their numbers, pretty muted response as well, 32.82 from 32.97. And jumping around to Exxon, I believe I have up here as well. There we go. They lost 18 cents a share, smaller than the 25-cent share the market was looking for. Honeywell out with their numbers, $1.56 a share, 7 cents above estimates. Revenue topped as well. Cost cutting, strong demand for warehouse automation equipment. Yeah, I would say so. Selling warehouse automation equipment, is there a better place to be right now? But trading a little bit lower from 164 to 160. S&P is negative by 19. We'll see if we can catch a little bit of a bid. Since I've been on the air, we've traded up a bit as well. Stay tuned, folks. Friday trading, Friday before the election. We'll be right back in 3 minutes.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step-by-step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We got 35 minutes to go until that opening bell. We got markets ticking a bit higher. Right now, S&P is negative by about 20, NASDAQ negative 93, the Dow off 196, Russell negative by 9. Jumping around to some of the other companies with earnings. Last night, you had Starbucks out with their numbers. Strong numbers, but trading lower, slightly lower to about 87 right now. Starbucks beat estimates by 20 cents a share, quarterly earnings of 51 cents a share. Revenue also above estimates. The forecast, a return to sales growth in 2021 amid a faster than expected return by customers to its stores. But guess what? Trading lower. It's a common trend, folks. A lot of acceleration priced into these equities already, no matter what you're coming out with. The market saying, well, we knew you were supposed to do pretty well. You better have beat the thing out of the park, almost like Google-esque. $3 to $4 billion in extra revenue for Google, and they're the ones trading higher. Activision, quarterly earnings, 71 cents a share, a 6-cent beat, revenue topping projections as well. Upbeat holiday season forecast, the new Call of Duty game set for release mid-November. Shares fell. Common theme, right? ATVI is their symbol. There you see quite a drop off. We're marginally lower right now at 77. You got Shake Shack. They lost 11 cents for the quarter, smaller than the 21 cents. So there's a beat as well. Better than expected revenue. Same store restaurant sales tumbling 32%. Shack is their symbol. Similar action, slightly lower. And we also have Skechers, SKX, out with their numbers. Finish it up. Pretty decent spike from 35 to 29. We're back to about 32.80. They lost 53 cents a share, 17 cents a share above the estimates. Common themes, slight beats across the board. Markets trading lower, backing up. We'll finish it up with some of those tech stocks. Apple trading a little bit higher, clawing back some of those losses. Amazon shares about $50 in the negative. Google spiking higher to the tune of about $120, and Facebook shares right now marginally lower as well, off about 40 cents. Nothing like a Friday before a presidential election, folks. Should be an exciting day in the market. Should be an exciting open, exciting close. Stay tuned. Larry Pesavento is coming up live next. Live programming all